Hi there. So welcome to the show today. I'm very much excited to have you once again for the Business Lecturer in Within show, where I'll teach live on Facebook here and answer all your questions for you in relation to that. If you are new to this channel, remember to subscribe to the channel and click the notification or the bell icon so that you'll be the first person to be notified anytime I go live. And for those of you who are not aware, also I go live every single day from Monday to Friday, 4 p.m. I come on live on YouTube like this to teach you for the ICAG examination. Now, yesterday we started and I gave you overview of the syllabus, what you need to do in order to position yourself on it, and also I mentioned the issue about professional ethics as being one of the fundamental topics that cut across a lot of subjects in the syllabus. So today what I want to do is to build up on that discussion, and one of the most important things is that, like I mentioned, this show is based on your questions, your recommendations. So go to the chat box and then put in your question in the chat box. I'm going to read all your questions live, and also if there are different sessions that I need to hold to answer your questions for you, you can put them in the chat box and I'm going to be answering all of those questions for you. You can ask me any question in any subject once it is in the ICAG Professional Qualification Syllabus, effective from November 2019 upward to 2023 or 2024. Just ask me the question and I'll be glad to answer you today. So today what I want to do is to continue with giving you the overview of the syllabus, giving you the understanding that you need of the syllabus, providing you with the assistance that you require in the syllabus so that you'll be able to understand the entire syllabus. Now, yesterday somebody asked a question on corporate reporting, and I gave the person a guideline. I think that was Samuel, and I answered the question for someone in relation to that. So today what I want to do is to continue with giving you the overview of the syllabus and then give you the understanding and the things that you need in order to prepare well for the examination. Now, yesterday, if you remember clearly, I spoke about the public sector accounting and finance. So today what I want to do is to, like I mentioned, continue with the overview and provide you with some strategies and techniques for financial reporting, and we will look at other subjects like taxation, financial management, and all of that. Now, if you just joined the broadcast, make sure that you subscribe to the channel, but most importantly, I want you to comment in the chat box. Tell me where you are watching from and any questions that you are having, whatever it is, maybe an accounting standard that you don't understand, you want to ask me about it, or whatever you want us to cover, just put it in the comment box. Whatever topic, Nhyira, I want you to teach this topic, just put it in the comment box, in the chat box, and I'm going to be treating that for you live here, because this show is strictly designed to answer your questions, and I'm going to go live like this every day, Monday to Friday, 4 p.m. to teach you and to assist you so you can prepare well for the May 2020 examination. My objective is to be able to empower you, equip you, give you the guidelines that you need in order for you to be in a better position, so when you get to the exam hall, you can correctly answer the questions and, most importantly, pass the exams and take your life to another level. So what I want to do briefly here is to give you the overview of the financial reporting paper and tell you the key standards and various things that we need to look out for. Now, if you know somebody who must be live here and the person is not here, you can share the video. You can share it on your Facebook page, on your Facebook groups, in your WhatsApp groups. Let's get a lot of people as much as possible to come and watch this broadcast as well, because there are a lot of people out there who are struggling, who need assistance, and you might not know the video that you share could be a door that will open for somebody to be assisted, somebody to be helped, so that together we can make the world a better place. So let me give you the overview of the financial reporting syllabus, and then give you some guide on the various accounting standards that you must look out for in relation to that. Now, the new financial reporting syllabus, when we compare it to the old syllabus financial reporting, just some few things that are changing, like specialized transactions. So issues such as partnership accounting, hire purchase accounting, and branch accounting, these three things are no more or are no longer in the new financial reporting syllabus. So partnership accounting, hire purchase accounting, branch accounting, they are no more in the new ICAG syllabus. So it makes the new syllabus quite straightforward, focused on financial reporting really, and helps you to understand what you need to understand. So the first thing, as always, is to deal with the issue about conceptual framework and regulatory framework. Let me just go to my slide there and make sure that I'm guided properly. So let's see what we got here. FR. Yeah, conceptual framework and regulatory framework. Conceptual framework and regulatory framework, as well as the issue in relation to ethics and ethics. This is the first segment of the financial reporting syllabus. Now, this is 10% of the entire syllabus. 10% of the entire syllabus. So that is it about that. Now, yesterday I discussed with you the issues about ethics, the fundamental codes of ethics. I told you that this cuts across a lot of subjects in the professional qualification syllabus. Now, the conceptual framework of financial reporting, I think I didn't discuss that yesterday, but I listed them out for you. Issues such as the objectives of financial statements, okay, that is part of the scope of the conceptual framework. We come to the underlying assumptions. So maybe let me go through that briefly with you. So the conceptual framework. Now, when it comes to the conceptual framework, it is a framework that provides guidelines for the preparers of financial statements in the preparation and presentation of financial statements. Now, the framework has what we call a scope. Now, that is what it covers, what it includes, what kind of guidelines that it provides the preparers of the financial statements. Among other things, the conceptual framework has the following things as the scope. We have what we call the objectives of financial statements. Then we come to underlying assumptions. Then we come to characteristics of financial statements. So ethics of financial statements. Then we come to elements in the financial statement, or elements of financial statement. Then we come to recognition of elements in financial statements. We come to measurements of the elements in the financial statements. Then we look at the concept of capital and capital maintenance. So there are 7 things that are entailed in the scope of the conceptual framework. Remember, if you are doing financial public sector accounting, this is also there. Conceptual framework for financial reporting or public sector entities. It's also there. It is the same thing. It's the same concept. The only difference is going to be wordings. Okay, I've seen some comments. I'll be reading the comments in a moment and reply to the comments. So don't worry. For those of you who have commented so far, I'm going to be reading the comments. So the first thing has to do with objectives of financial statements. Now, what are objectives of financial statements? Before we answer that question, we need to ask ourselves, what are the financial statements that companies prepare? So according to IPSAS 1, presentation of financial statements, organizations prepare, among other things, 5 financial statements. So when we say the financial statements of a company, it entails, among other things, 5. So we have the statement of financial performance, the statement of changes in equity, the statement of financial position, we have the statement of cash flows, and then we come to the notes to the account, or just notes. Now our focus here is to look at the first 4. So if we say objectives of financial statements, what are the objectives of financial statements? Number 1, the statement of financial performance, which is the same as the income statement and other comprehensive income. Its objective is to measure the financial performance of what? The organization. That is the objective of the income statement and other comprehensive income. 2, the statement of changes in equity is to measure the movement in the shareholders fund or shareholders fund during what? An accounting period. That is what the statement of changes in equity does. Then we come to the statement of financial position. Like the name suggests, the statement of financial position measures the financial position of the company. How much assets do we have? How much liabilities do we have outstanding? What is the liquidity status of the company? What is the gearing status of the company? What is the capital structure of the company? All of that is demonstrated in the statement of financial position. Then we come to the 4th one, that is the statement of cash flow. The statement of cash flow. Now, like the name suggests, the statement of cash flow is used to measure the cash inflows and the cash outflow during an accounting period. So the first thing is objectives of financial statements. For us to understand the objectives of financial statements, we need to look at what? The financial statements that companies prepare. So if we are doing financial reporting, one of these will be in the exam hall. Either you are preparing the statement of financial performance and the balance sheet, or you are preparing what? The cash flow statement. So you've got to make sure that you understand it, and we're going to be going through this later on during our live sessions like this. So that is the first thing about the scope of the conceptual framework. The second thing has to do with the underlying assumptions. Now, the scope states that, or the framework states that, the financial statement preparation must be done using some basic assumptions. And there are 2 underlying assumptions for the preparation and presentation of financial statements. We have what is called the going concern and then the accrual basis. The going concern and the accrual basis. These are the underlying assumptions for the preparation and presentation of what? Financial statements. Now, what is accrual basis? The accrual basis of accounting has to do with the recognition of transactions, not when cash is received or paid, but when the transaction what? Takes place. So it is the accrual basis of accounting that enables the entity to be able to determine whether we spent more money whether we are owing or there is an income outstanding for us. So when we are preparing the financial statement, we must prepare the financial statement not using cash basis, but using what? The accrual basis. Then the second underlying assumption for the preparation and presentation of financial statements is the going concern. The going concern. Now, the going concern concept states that financial statement or an entity must be seen as the one operating into the foreseeable future. That closing balances from one account must be carried forward to the other account. But you've got to be careful. When we say going concern, that means, can the entity operate in the next 12 months? So going concern, even though the definition looks like into the foreseeable future, the foreseeable future is the next 12 months. So when we are preparing financial statements, we must assess whether the entity can operate into what? the foreseeable future can operate within the next 12 months. If the entity can operate within the next 12 months, then yes, we can apply the accrual basis and then use the going concern concept and carry the balances forward. But if we assess and we realize that the entity cannot operate into the foreseeable future, then we have to prepare the financial statement on what? Breakup basis, meaning that the company is coming to an end, the company is being dissolved, and nothing is going to be carried forward. That is the second item in the scope of the conceptual framework. So, number one, objective of financial statements. Number two, the underlying assumptions. Now, if you just joined the broadcast, comment below with your questions. Let me see and read through a couple of the comments that I see here. Let's see. Chachu, if I don't mention your name right, you please forgive me, okay? You know, name mentioning, it's something. So maybe I just have to mention your first name that I can mention. Chachu said, this man is doing very well. Okay, thank you very much, Chachu. Ebenezer, I hope I am not late. Yeah, definitely you are not late. Ebenezer, again, please, I want you to treat leases. That is good. This is what I'm looking for. So that is IFRS 16. So let me grab my notes. And put that down. So leases, IFRS 16. Okay. So any other topic, please put it in the comment box, because I am designing this one-on-one or live sessions based on the questions you ask me. So the questions you ask me, what do you want me to do, is what I'm going to come here to come and do to provide you the best experience. Samuel Quasin, hi there. Yeah, Samuel, you're welcome. One of the faithful fans here. I like the spirit very well. You can send me here on WhatsApp, okay, Samuel, after the discussion. Now, the third thing in the scope of the conceptual framework is characteristics of financial statements. Now, remember, for financial statements to be useful to the users of financial statements, it must possess some characteristics. So the conceptual framework gives some attributes that the financial statements must have in order for them to be what? Respected, for them to be useful to the users. So when we say characteristics of financial statements, we are referring to the attributes that a financial statement must possess in order for it to be useful for the users of the financial statement. The attributes that a financial statement must possess or must have in order for them to be useful for the users of the financial statements. But you've got to understand this. When it comes to the characteristics of financial statements, they are further divided into two. They are 6 in number, but they are further divided into two. So let me put it down for you to see how it goes. So I'm bringing this line here and we go here. There is what is called the fundamental qualitative characteristics, and then the enhancing qualitative characteristics. Now, they are all 6 in numbers, but we're going to be separating them into two: the fundamental qualitative characteristics and then the enhancing qualitative characteristics. Now, what do we mean by fundamental? When we say something is fundamental, what does it mean? And when we say something is enhancing, what does it mean? Let me give you an illustration now. This illustration, the ladies will understand it better. You see, one of the things about ladies' makeup, now don't ask me where I learned that, but I just know. Don't ask me where I learned that. One of the things about ladies' makeup is that before they do their makeup, after they bath, finish applying whatever it is, they do what is called the foundation. Okay, so they apply the makeup, but it's not really what they are going to be taking out. So after they apply the first page foundation aspect, they go and dress. So after they finish dressing, if they now want to go out, then they now come and do what is called the final touches. Now, or if you have seen a lady before going for a meeting somewhere, you realize that when she's stepping out of a car, when she's stepping out of her car, you realize that she will take her mirror and then she quickly do some touches there. Now, what she did earlier to go and dress and come is what we call the foundation. It's the basic. It sets the tone. What she does finally before actually going out is to perfect her beauty and make her stand out. Now, why did I use that illustration? Because when it comes to financial statements also, it is the same thing. For financial statement to be useful to the users of the financial statements, it must have what is called fundamental qualities, fundamental characteristics. That is the basis. That sets the tone. Then there is what is called the enhancing characteristics. These ones perfect it. This one makes it look good. This one makes it look attractive. And this one makes it look understandable. So what are the fundamental qualitative characteristics of financial statements? Two things. Number one, faithful representation. And then number two, relevance. So these are the two fundamental qualitative characteristics of financial statements. What does that mean? It means that when we are preparing and presenting financial statements, for the financial statements to be useful for users, the information in the financial statement must be faithfully represented, and all the information represented must be what? Relevant for the decision making of the users. I'll come back to that in a moment. Then the enhancing qualitative characteristics, like I mentioned, these are further attributes that enhances the understandability and the usefulness of what? The financial statements. So, what are these? Four of them. The first one is called understandability. The second one is called verifiability. The third one is referred to as timeliness. And then the fourth one is gone right now. Let's go. When I remember, I'll tell you about it. I'm going to remember before I finish explanation. The first one is faithful representation. Now I'm seeing some comments. Let me read them before I go. Who is this? Nomeshi Evans. Like I said, if I don't mention your name right, please forgive me, okay? Forgive me. So Nomeshi Evans, good evening. Please, which days are scheduled for FM and PSA? Now, Nomeshi Evans, we've not scheduled a day for a subject because we are tailoring this live lectures based on questions students ask. So if you want us to cover anything in FM, anything in PSA, put in a topic in FM that you want me to cover. Put in a topic in PSA you want me to cover. Once you give us the topic, that is what we are going to be covering the following day or the next day about that. So we've not really scheduled that, oh, today we will do this. The reason is that if we try to schedule a day for a paper, we are not going to be able to provide equal service to people. So we want to schedule the lessons based on students' questions. So be specific. FM, what do you want me to cover in FM? Is it about cost of capital, investment appraisal, risk management, whatever it is? Put it in the comment box. PSA, what do you want me to cover? Is it the preparation of financial statements, evaluation of the financial statement? Is it procurement? Is it PPP? Is it budgeting? Put it in the comment box. Something specific that you are finding challenge in, that you want to understand, and I will be able to address that for you. Like Ebenezer just asked, he wants to see something on IFRS 16 leases, and definitely by maybe tomorrow or on Thursday, we will be covering that live on the channel. Ebenezer, if you know, you know. If I know, I know. No, I don't know anything. Your body is 75% water. Is that somebody's name? Wow. Your body is 75% water. I don't know who is it, but your English is very good. Okay, thank you. Thank you. Your body is 75% water. That is a nice name though. Okay, so that is it about that. Nomeshi, Evans, and Ebenezer, and then your body is 75% water. So let me come back. So the qualitative characteristics of the financial statement, broadly divided into two: fundamental characteristics and then enhancing characteristics. So let's start with the first one, faithful representation. When we say an information is faithfully presented, it means that the information is presented in such a way that it is supposed to be presented. In such a way that it is supposed to be presented. What does that mean? Now, for an information to be faithfully represented, it has to be complete, okay? It must include all of the transactions that it purports to represent. Now, let me give you an example of faithful representation. Let's say that we are friends, and you have a business, I have a business. So let's say that your company came to render service for my company. Now, the service you rendered for me, for my company, if you had rendered that service to another person, you would have charged, say, $20,000. But because we are friends, your company rendered the service to me and they charged me only $5,000. The question we ask is, do you record the $20,000, how much we should have paid, or you record the $5,000, how much we paid? Faithful representation means that we must what? Represent or record the transaction the way it purports to be what? Recorded. How much did we pay? We paid $5,000. So we must incorporate in our or recognize $5,000 for the services that you render for me. However, in our footnotes, you rendering us that service. That is one way we can look at the issue about what? Faithful representation. Now, faithful representation and relevance, they look alike. Now, an information is relevant or an information is material if it can influence the decision making of the users of the financial statement. So, for instance, still using this illustration, let's say that my company now, the year made a profit of, say, $25,000. Now remember, if I hadn't or you hadn't rendered the service to us and charged us $5,000, we would have paid $20,000. That means you saved us $15,000. Now, if I don't disclose that in the books and shareholders are happy that, oh, we have made a profit of $25,000, that would be a lie. Because if we had taking this service from anyone else, then it would have reduced our profit by $15,000 and the actual profit we had made would be what? $10,000. That is why that information becomes what? Relevant for its inclusion in the footnotes of the financial statement. And that is something you must understand in relation to that. Then we come to the issue about understandability. Now, the conceptual framework states that users of financial statements are assumed to have a knowledgeable understanding of the entity and its operation. As such, financial statements must be presented or prepared and presented in such a way that they can be simply what? Understood. So understandability simply means preparing the financial statements in a way that can easily be what? Understood. And I believe that if you take the financial statements of any company and you understand the nature of the company, you know this is a revenue, you know this is income, you know these are the categories of what? Or categorization of the various expenses. That is the issue about understandability. Verifiability simply means that can the information you are provided be confirmed from other sources? That is verifiability. So for instance, if you said during the year you leased an asset, or during the year you bought a vehicle, or during the year you won a contract, where is the documents proving that? So invoices, footnotes, disclosures will enable shareholders, will enable users to verify the items in what? The financial statement. So if there is an item in the financial statement that is not supported by any supporting documents, then that means that what? We cannot verify, we cannot trust the financial statements. The last thing is comparability. I told you before I get there, I'm going to get it right. So the last one is comparability. Then the next thing is timeliness. Now, what do we mean by timeliness? Timeliness simply means that the financial information or the financial statement should be available when needed. Now, an information that comes earlier than required is useless. An information that comes later after the date is also useless. So the information must be within what? A reasonable time for it to be useful to the users of financial statements. So if, for instance, our year ended is 31st October every year, and as at June the following year, financial statements have not been prepared, then timeliness is not represented there, because if anything, it should be 2-3 months after the year end. Financial statements should be available, should have been audited, so that we can make various decisions that we have to make about the organization. Then the last thing about the qualitative characteristics is comparability. Comparability. Now, what is comparability? Comparability is a feature which means that the financial statement of an entity can be compared with the financial statement of another entity, or the current year financial statement of the entity can be compared with its previous year financial statement if they use what? The same accounting concepts or principles in the preparation and the presentation of financial statements. What does that mean? If we can compare this year's financial statement to last year's financial statement, then we can determine that, oh, the company is growing, the company is declining, the company is making profit, the company is making losses, the company is earning more revenue, the company is making less revenue. So that is the issue about what? Comparability. But to be able to achieve this objective of comparability, there is also another principle called consistency. Consistency simply means that in the preparation and presentation of financial statements, the preparers of financial statement, that is management, must adopt or use the same accounting principle over the years to enhance what? Comparability of the financial statements. That is, the entity can only change the accounting principle if, one, it is a requirement as a change from the regulatory body, like IAS 17 is now useless. Okay, you don't use IAS 17 now to account for leases, rather you use IFRS 16. So if there is a new accounting standard like that, then certainly if you are adopting that this year, then we would have to what? Apply it this year. Now that doesn't mean we have to go to the previous year fair and go and adjust all of that. No. Or if the reclassification or the adoption will give a better understanding of the item that is being classified. So that is the issue about what? Consistency. In order for us to achieve comparability of financial statements, the financial statements must be prepared using the same accounting principle consistently from one period to the other, or by two different entities, they must use the same accounting principles so that we can enhance what? Comparability of the financial statements. So what have we said so far? If you just joined, make sure you subscribe to the channel and share this video for others to be able to get access to this information that we are giving out here. And comment below, most importantly, comment below the topics that you want me to cover. Comment below the subjects you want to see more here. Comment below the specific things that you want us to cover. Ebenezer had mentioned IFRS 16. Someone also mentioned something on FM and then PSA. So if you just join, comment below with specific topics that you want us to cover, and I bet you I'll be covering that on the channel during this one-on-one sessions via YouTube. So we're looking at the conceptual framework of the financial statements and the scope. So we've looked at the objectives, we've looked at the underlying assumptions, going concern, accrual, then the characteristics of the financial statements, that is the fundamental characteristics, and then the enhancing characteristics. And under that, we've mentioned 6 things: faithful representation, relevance, understandability, verifiability, timeliness, and then comparability. Now the next thing in the scope has to do with elements in the financial statement. Now, what are the elements in the financial statement? You know them already, right? What are the elements? There are 6 elements. Did I say 6? Yeah, probably 6 elements in the financial statement. Let me list them out, and I hope you can define them, so I'm not going to be defining them. I know you can do them. So these are, now, like I mentioned, this same thing we are doing here is valuable for corporate reporting, valuable for financial reporting, valuable for public sector accounting and finance. They are all there. So it's valuable for these three subjects. And you see how one thing is being used to cut across three subjects. So assets, liability, expenses, equity, and then revenue, or if you want, income. So these are what are called the elements in the financial statement. So what are assets? What are assets? I'm giving you some time to mention or say out the definition in your head. What are assets? Now we say that assets are resources controlled by an entity as a result of past events from which future economic benefits flow to the entity. Assets are resources controlled by the entity as a result of past events from which future economic benefits flows to the entity. So when we say assets, we are talking about the resources what controlled, not the resources we own, the resources controlled. The key word there is control, because an entity cannot control an asset as a result of direct purchases. An entity can control an asset as a result of leasing the asset. So whether we purchased it or we lease the assets, we are gaining control and the future economic benefit is flowing to us in relation to that. The second thing is liability. Liability. What is liability? A liability is simply a present obligation as a result of past events, the settlement of which results into an outflow of the future of the economic benefit embodying the entity. Let me take that again. Liability is a present obligation as a result of past events, the settlement of which results into an outflow of the economic benefit embodying the entity. That is what we mean by what? Liabilities. Liabilities. Then the next thing is expenses. Expenses can be defined as a reduction in the economic benefits as a result of payments for goods and services, or as a result of reduction in the value of an asset. So if an asset lost value or loses value, it is part of the expenses, that is an impairment of the asset. Or if we pay for goods and services, we pay for salaries, we pay for interest, that is also part of our expenses. Equity. Equity, to define equity, you just have to go back to the accounting equation. For those of you who did accounting in high school, you remember the accounting equation, or you did level 1 financial accounting. What is equity? Equity is the residual amount after the payment of what? Liability. So in a simple language, equity is equal to assets minus what? The liabilities. Equity equals assets minus liabilities. Then the last thing has to do with revenue. Revenue is simply the gross inflows to an entity as a result of what? In return of which it renders what? Services or goods to the customer. So anything that flows into the company, a gross inflow, in return of which the entity is doing something, that is comes from the money of the company. Revenue comes from what the company is doing currently. Revenue comes from the actual activities of the company. So for instance, a school, our revenue will be tuition fees. However, if we sell our laptop or we sell our desks, that becomes what? An income. Or if we get interest on any deposits, that also becomes income for us in relation to that. So these are the things that you have to understand about characteristics and then what? Elements in the financial statement. Now, when it comes to recognition of these elements and measurement of these elements, this is what takes us to the second aspect of the syllabus, and that is application of accounting and financial reporting standards. So the second aspect of the financial reporting syllabus is application of accounting and financial reporting standards. So when it comes to the rest of the scope of the in the conceptual framework, recognition and measurement, we do that using what? The accounting standards. Now, the accounting standard now covers about 25% per the syllabus what? Grading. 25% per the syllabus grading. Now, that is quite huge. That is quite a lot in relation to that. So, you know the accounting standards already. I'm not going to bother you with them. Now, the good news is that on this channel, I have covered a lot of accounting standards. Now, there are what I call core accounting standards that you must understand. So things like IAS 16, IAS 12, IAS 38, IAS 37, IAS 36, IFRS 15, IFRS 16, IFRS 9. These are core accounting standards. Now, whether you are doing corporate reporting or financial reporting, these are core accounting standards that you must know, you must be aware of. And I have videos already on this channel on some of these standards. I think the only thing that I may not have video on this channel here is the IFRS 16. But again, during this live broadcast, I'll be teaching these live and we'll be solving questions. I will put a question on the screen. You'll be able to copy them or take a screenshot of them and help you to study. So these are core accounting standards. IAS 16, property, plant and equipment. IAS 12, income tax. IAS 38, intangible assets. IAS 37, provisions, contingent liability and contingent assets. IAS 36, impairment of assets. IFRS 15, revenue from contract with customers. Now, this is a new accounting standard that is replacing the IAS 18 and then IAS 10. IAS 18 was revenue, IAS 10 was construction contracts. Then we come to IFRS 16, leases. This is the new accounting standard that is replacing IAS 17. So for your information, that is also there. Then we come to the IFRS 9, and that is about financial instruments. So these are core accounting standards that you've got to be aware of. You must know this standard offhand. You must know them like at your fingertips. The day that you are going to be writing financial reporting or corporate reporting, you must have these standards at your fingertips, because where they are, there is a question in the exam hall waiting for you on these standards. Whether you like it or not, the question 2 aspects, corporate reporting, financial reporting, there are questions there waiting for you on these 8 standards that I've listed here. Is it 8, 2, 4, 6? 8 standards that I've listed here. So make sure you go through them thoroughly, make sure you understand them, make sure you solve enough questions relating to these standards. But the fun part is this: when you are doing IAS 16, there are other accounting standards that are related to the IAS 16. So together we call them the non-current assets accounting standards. So in addition to IAS 16, there is IAS 20, that is government grants. There is IAS 23, that is borrowing cost, and there is IAS 40, and that is what? Investment property. These are other 3 accounting standards that you must be aware of. If we add that to the IAS 16, it becomes 4, and these 4 accounting standards relates to the issue about non-current assets. So as you are doing IAS 16, these standards will emerge, and you should be able to look at them in relation to that. So that is the second aspect of the syllabus, application of accounting and financial reporting standards. Now there are other standards, okay? There are other standards. IFRS 5 is there, assets held for sale and discontinued operation. We have IAS 33, that is earnings per share. We have IAS 21, foreign exchange transactions. We have IAS 24, related party transactions, and the list goes on. Okay, there are a lot of other accounting standards. IAS 2, inventory. IAS 41, agriculture. In relation to that, IAS 8, accounting estimate, change in accounting concept and estimate. Then IFRS 10, events after the reporting period. All of these are standards that you must be aware of, but like I mentioned, these are the core accounting standards. Whether you like it or not, there is a question waiting for you May 2020 or wherever you're going to be writing financial reporting or corporate reporting exam. There is a question waiting for you on these. So you've got to be able to go through them. You've got to be able to understand them very well. Then the third thing that we come to is the single entity financial statement. Single entity financial statement. Remember, your ability to be able to prepare the financial statement, that is the statement of financial performance or the income statement and other comprehensive income, statement of changes in equity, the balance sheet, and then the cash flow statement. Your ability to be able to prepare these statements is based on your understanding of the accounting standards. So if you don't understand accounting standards, don't start with a single entity, because there are some of you, your learning approach is actually what is killing you and what is affecting you. Because some people will start solving questions, and you are solving questions, you are seeing things you don't understand, you refer to the solution, you still don't understand. You need to go back and look at the principles first. So make sure you spend some time on the accounting standards. I did a video on what I call the success triangle, academic excellence, success triangle. You can search for it in the playlist called How To, or just on my channel, Success Triangle, and look at how I explain the three things you need to do. So before you are solving questions, number one, you need to understand the principles. You need to understand the principles. So before you come to preparation of the single entity financial statements, make sure you spend ample time on the understanding of accounting standards. Now, here on campus as well as our online students, what we do is for financial reporting and corporate reporting, we spend ample time on accounting standards. Because if you don't get the accounting standards, you don't get the double entry well, you will not be able to prepare the financial statements. And when it comes to corporate reporting and financial reporting, one of the concerns that the examiner has raised all the time, and the reasons why students fail a lot, is their lack of understanding of double entry, which goes back to their lack of understanding of what? The accounting standards. So make sure, in addition to having questions on accounting standards, to be able to excel in the preparation of single entity financial statements, you need to understand what? The accounting standard to catapult yourself in relation to that. So that is 20%, this is 25% of the syllabus. Then the fourth thing is definitely students' favorites, and that is consolidated financial statements. The consolidated financial statements. Students' favorite topic, right? Every FR and CR students want to answer console first. I don't know who came up with that, but that is it. Now, consolidation in level 2 financial reporting, consolidated financial statement is going to be really simple, okay? Because you are looking at a simple group structure. For those of you who want to watch my videos on consolidation, I have already covered a thorough video on consolidation. I think it is a 7-part video on consolidation. It's already available on my channel, so you can check it out on my channel. I looked at the principles. So I went through group structure, associate, net assets, NCI, retained earnings. So I go through the stages and I explain the principles to you. You can go ahead of me, watch that video, so that if I'm explaining it here and we are solving questions here, it will be easy for you to understand. So consolidation is going to be there. That is also 25 marks. It is also called business combination, okay? It is the same thing, business combination. Then the last thing there is evaluation of financial statements. Evaluation of financial statements. This is also 20% of the syllabus. So 10, 25, 20, 25, 20, making what? 100. So what is the evaluation of financial statements about? The evaluation of financial statements is simply about ratios and interpretation of the ratios. Now, if you just joined the broadcast, comment below with any questions that you are having, topics that you want me to cover more on the channel. Every single day from Monday to Friday, I go live on YouTube to teach like this. But whatever I'll be teaching will be based on the questions you put in the comment box, because I want this to be personalized. I want it to be tailored. So it is not what I feel that I need to teach. It is not every day that I'm going to be doing that, but I want to also answer questions that you are having to help you to well prepare for your examination. So evaluation of financial statements, ratios, okay? This is in corporate reporting, it is in financial reporting, it's even in financial accounting in the level 1. Now, so here we are looking at, but the questions are going to be different for financial reporting and also for corporate reporting. So like always, you're going to be looking at profitability ratios, gearing ratio, working capital ratios and liquidity ratios, investors ratio. But like I always say, it is not about the calculation of the ratios, but rather the interpretation of what? The ratios. So your ability to be able to interpret the ratios is what is going to be what? Carrying you here in relation to that. So when it comes to financial reporting, this is what you have to understand about financial reporting. This together makes up the 100% that you need for your examination. So conceptual framework and regulatory framework, as well as ethics. Remember, ethics now is fundamental. It is fundamental. So all other things being equal, in each examination sitting, there will be questions on what? Ethics. And like I explained yesterday, the question is going to be a scenario-based question, and the examiner is going to ask you what is the appropriate course of action that you have to take in relation to that. Then application of the accounting standards. I've listed a number of accounting standards here that you have to understand. I call them the core accounting standards. You must understand them. Single entity. Before you get there, make sure you understand the accounting standards thoroughly. And then business combination or consolidation. Also, some of the accounting standards will play a key role there. And then definitely the evaluation of financial statements. So these are what you have to understand about financial reporting. Now remember, one key thing that I discussed as well, I've discussed today, is the issue about the conceptual framework. I told you that it is the same thing in financial reporting, the same thing in corporate reporting, the same thing in public sector accounting and finance. Only that when it comes to the public sector accounting and finance, the terminologies are going to be a bit different. And yesterday, I gave you examples of some of the accounting standards in financial reporting, and they are similar ones in the ICAG, that is the International Public Sector Accounting Standards. So these are what you have to understand when it comes to the financial reporting syllabus. So comment below with any questions that you have, what you want to see more on this channel in relation to that. I'm wrapping up today's discussion, and I'll be ending any moments from now with your questions. Now, for those of you who are not attending lectures, or you are located at places where you cannot get access to any lecture, I have the courses available online, the full ICAG course available online. So you can call 050-114-9296. You can call or WhatsApp that number, or you can visit NhyiraPremiumUniversity.com/courses, NhyiraPremiumUniversity.com/courses, and you can enroll in a course. Now, when you enroll in a full course like that, you get access to ebooks, you get access to question kits, you get access to the lecture videos, and most importantly, you get a one-on-one session with me once every week via Skype. So for those of you who are not attending lectures but want to attend lectures, or those of you who are busy that you can attend lectures, but you still have to prepare for the examination, I would recommend that you make sure that you enroll in one of our courses online. It is going to assist you a lot. The one who takes the subjects, you are going to get access to the lecture videos, study materials, question kits, and one-on-one session with me once a week via Skype, where I answer any questions that you are having in relation to that. So if this is something that you are interested in, you can visit our website and enroll in the course, or you can call 050-114-9296 and your enrollment will be processed so that you can prepare well for your examination. My recommendation all the time is this: don't go into the ICAG exams without attending lectures. You must attend lectures. Oh, don't say, last semester I learned it, so I just need some revision. No. If you learned it last semester and you did not sit for the exams, or you learned it last semester and you failed the exams, it simply means you did not understand the thing well. And you don't need any personal revision to understand. You still have to attend class. You still have to be part of a community. You still have to be part of people with the same objective, with the same goal, so that you can prepare well for your examination. So my recommendation to you is this: do not go into the ICAG exams without any preparation. And as you can see, the exams fee has been increased. So if you write the exams and you don't pass, you are actually throwing a lot of money away. That is why you must prepare well, so that when you pay that money, you will still be able to pass the exams and ultimately become a chartered accountant, achieve your objectives, and make a better, become a better version of yourself. So that is what I want you to understand. Make sure you attend lectures. Look for lectures, partner in learning around. Go to the ICAG website. Look for the partner in learning. Find out which is closer to you and attend the lecture there. Or if you want to join us here on campus at Dagoman, or you want to join us online too, you can be part of it. You'll be part of a community. You'll be updated on a regular basis. You will get access to personalized experiences, and that is what you need in order to prepare well for your examination. So thank you very much for joining the broadcast today. I'm very much excited that you took time to join the broadcast. What I want you to do is to make sure you subscribe to the channel if you have not subscribed yet, and click on the bell notification so that anytime I go live, you will be notified and you can join me live. And I teach every day from Monday to Friday, 4 p.m. Monday to Friday, 4 p.m. every single day I go live. So thank you very much for all your questions. Samuel, Chachu, Ebenezer, Nomashi Evans, and then your body is 75% water. That is somebody's name. I hope you can see that in the chat box, right? That is somebody's name. So thank you very much for joining the broadcast today. And remember, join me tomorrow, same time, 4 p.m. as we continue with this discussion. Like always, okay, Opoku, Papa Opoku Yang. God bless you. Amen. Thank you very much for joining the broadcast. So God willing, next week, make sure you join me. Please, I want you to spread this word, okay? There are a lot of people across the country who need to be live on YouTube, who need to watch these videos. So share the channel on social media, share the channel on your WhatsApp pages, your Facebook pages, everywhere you can share. Tell your friends about it, that this guy, Nhyira Premium, goes live every day, Monday to Friday on YouTube, and he's dropping a lot of bombs that will enable you to pass your examination. And let's carry everybody along so together we can be able to become successful, and most importantly, make the world a better place. Again, thank you very much for joining the broadcast. I'm very grateful, and I'll see you same time tomorrow as we continue with our journey for the ICAG May 2020 examination and beyond. So, bye-bye, and you take care of yourself.